Ed Ponsi here, your FX educator here on behalf of FX Street. It's Draghi Day in Forex land. Draghi, the head of the European Central Bank. Look what he's done to the euro. I'm pretty sure that's the highest the euro has been in quite a while. Look at that. He's jammed it up there up to 115.70 and now pulling back toward 115.55. Let me just check the daily here really quick. It's quite a shot there. So um, we had pulled back, but he's pushed us back up toward our highs from earlier this week, and we're back into this area. Remember we circled this area earlier this week. This is really the focus in here is on this shooting star pattern that we may have discussed. Shooting star reversal pattern that worked very nicely back over a year ago. And it took over a year to make it back to this point. And here we are in that area again. And so the market trying to figure out what to do now that we're back in that area on the euro. And Draghi giving it a nice push today, giving the euro a nice push, right? But we're stalling out near Tuesday's highs. Tuesday's high was 115.82. Today's high 115.70. So far, he's not quite finished yet. I'll give it the 15-minute chart. So it's interesting, isn't it, that there it is on the 15-minute. You can see the volatility just explode. The actual ECB announcement that there was no change in interest rates actually pushed us down a little bit. And then Draghi's speech shoots us higher. Okay. So a very nice move in the euro. Starting to bleed down a little bit. But market is taking Draghi's comments as being quite bullish, actually. What's he really saying? It's funny. He's kind of playing both sides of it. He was talking about the economy's getting better. He's talking about inflation being a problem in the future. It's amazing how these central bankers always see inflation being a problem in the future, but it never seems to happen. At the same time, he's saying we still need a lot of accommodation. We still need low interest rates. We still need quantitative easing. So, you could take it all with a grain of salt. It's hard to say if yeah, especially when most of what he said was kind of dovish. I mean, I don't know if you can really, how seriously can you take this stuff? I don't know, man. Let's get back to our pound dollar setup. Did anything ever actually materialize here? 60-minute chart and pulling up the RSI. Yeah, we did get the entry. And that's what I mean when I say that we never know the exact entry point. So when this candle closed at 9 o'clock, it closes at 129.70. And the next candle, therefore, opens at 129.70. And that's your entry, 129.70. Right there. Stop has to go under the lows. So if the entry was 70, we said the low was 31. So the stop could be 20. So entry 129.70. Stop 129. 20. We had targets at 130, 50. Hey, where'd you go? Hold on. 130, 50, and 130, 95. And we also had one at 129.95, but I don't know if I can use that now. I mean, can I really use a 25 pip target with a 50 pip stop, even if it's my first target out of many? Well, let's see if the whole trade stands up now overall. First, I'm just going to view the third target. Whoops, I don't think I wanted that to be yellow. Hold on. So from entry, 129.70, to target, 130.95, that's 125 pips. 125. I guess the entry, you could say, was probably higher than we anticipated. And the stop is 50. So it's really not 3 to 1. It's really 2.5 to 1. So right there, I might just reject this and say, I don't know if I really want to do it 2.5 to 1. What caused this? Well, to become a 2.5 to 1. Well, see that big green candle? See, initially we were thinking, well, the entry's probably going to be around 129.50. But because the euro jumped against the dollar, it pulled the pound up against the dollar with it and pushed that entry up to 129.70 instead of 129.50. Now, if your entry is 129.50 versus 129.20 stop, it's a 30 pip stop versus about 150 pip target. Now it's 5 to 1. Instead of 5 to 1, you got 2.5 to 1. So that big green candle really makes the entry a lot less attractive, doesn't it? It really makes the whole thing a lot less attractive. And so I got to say, I'm probably just not going to take that entry. It wrecks the whole trade for me. And it ruins the first target. The first target, and usually I like my first target to be 1 to 1, and I like my last target to be at least 3 to 1. But in this case, my final target is less than 3 to 1, and my first target is less than 1 to 1. My final target ends up being 2.5 to 1. My second target ends up being, well, if the stop is 50 and this target is 70, this is 1.5 to 1. And this target is 0.5 to 1. So the whole risk reward got destroyed on that entry. And I got to tell you something too. Look at this. I'm going to try to pull these up. Can I make put another chart up here side by side? Now let's compare these two side by side. Would the pound have gone up at all if not for the euro? In other words, the euro really crushed the dollar here. And I'm asking myself, would the pound, if the euro hadn't jumped about 80 or 90 pips against the dollar, I'm asking myself, would the pound have gone up at all? If the euro had just stayed put, I think the pound might have gone down. So, no love lost here on this one. I think I'm going to wait. Now, Carlos is saying it could go to 134. That very well might be true. Longer term, I like it. Shorter term, it feels heavy to me. Just observing it this morning before Draghi, it was just drifting lower. Like in other words, while the euro was just hanging around, look at the euro here. The euro's drifting lower here too, but look at the way that the pound is coming down. Look at the difference. The euro's floating and the pound is rocking down. It looks to me like people are covering dollars ahead of Draghi. I mean, let's face it, dollar shorts has been a moneymaker recently. Being short the dollar has been a good way to make money recently. Fair enough? And then you've got this big event risk coming with Draghi. I think it's fair to assume that there was some dollar covering. So the dollar gets stronger against the euro and against the pound, but much more against the pound, which I think is telling us something. I really like the 128 area on the pound. I think it's too soon to buy pound, maybe. Maybe this whole thing was just not, maybe this whole thing was too soon. We'll take a look at the bigger picture to see if that can get to 134. Helpful to see how you filter through the 60-minute candles. Thanks, Richard. I mean, I'm looking at it saying, just trying to compare them side by side, saying, yeah, the dollar's getting stronger on both, but it's really crushing the pound here, and there's really no news on the dollar. There's really no news on the dollar here, so to me, it's just short covering because dollar shorts have been making money, right? Dollar shorts have been doing quite well. And so if you're doing quite well, you're going to cover ahead of a big event risk. Maybe I think we got ahead of ourselves here. Maybe this needs to come down a bit more. So I'm just going to wait a little bit. Or maybe we get another oversold buy. That often happens. And if I look at this hourly, we're not really that close to the trend line. I'd prefer to buy it closer to the trend line. We don't have to buy it right on the trend line, and we don't have to buy it right on support. But I sure would like to be closer to it because I feel that, okay, at least I have a backstop. If it gets away from me, at least I say, okay, well, it's probably not going to go past this point. I love this confluence down here of horizontal support and diagonal support. Yeah, it's ideal. Exactly. It's ideal. In other words, I could take a shot at it here, or I could just wait for the better shot. Maybe I just wait for the better shot. Hopefully I don't regret it. Okay. Well, it wouldn't be the first thing I regret. It wouldn't be the last thing I regret. Another thing about the 60-minute and the RSI is this. And it wrecked my that the size of that green candle just wrecked my risk reward. But a lot of times when you get that, and like that was a great buy signal here, right? That was perfect. But you never know. They don't all work. I mean, buying it here might end up being one of these, which is beautiful. You catch the bottom and it runs and you make a whole bunch of pips. Or maybe it's one of these, right? You catch it and then it just dumps and hits your stop. So who knows? I mean, um, I never regret too much. You shouldn't regret too much missing your entry because you don't know. You could be missing a loss, right? And sometimes you get these multiple ones like here. You see these multiple entries. So this could be one of those multiples where, maybe it comes down a little bit more and it gives you another shot. Maybe the next shot is the better shot. Who knows? Okay. But I do get the feeling because the euro and the US dollar move opposite each other so much of the time, I do get the feeling that the pound is only moving up because the dollar is getting punished by that euro moving up. And if you've never seen this, please allow me to show you what I'm talking about. I'm just going to dump this chart completely. Let me show you on a new chart. Well, why does it default to a 10-minute chart? Who on earth needs a 10-minute chart for what? I'll make that a daily. And let's get another one. And we'll put that right under it. And we'll make that one a daily as well. Now, what's the best way to demonstrate what I'm trying to explain to you? Okay, the top chart is Euro USD. The bottom chart is the US dollar index. What do you see? Is this not the same exact chart? I mean, well, it's the mirror image, right? It's the mirror image. Let's make them weekly. You can see it, right? It's, again, Euro USD on the top, dollar index on the bottom. They pretty much do the opposite. So if the euro's shooting up this morning, what's the dollar doing? The dollar's going down. Almost certainly, right? Because these two things do the opposite. They almost always do the opposite. So if they're doing the opposite, that means what? That means the dollar's falling, then the pound catches a break and moves up a little bit. And so do the other ones, Canadian dollar, Aussie, New Zealand, just because the euro's going up. Just because the euro's going up. Because if the euro's going up, the dollar is going down. Almost always. I mean, it couldn't be any more. Look at it. I mean, this is going back 5 years now. Right? Euro goes one way, dollar goes the other way. Almost always. Almost every case. So it's hard to argue with those charts. And this is true in most time frames. I mean, Let's go 60-minute. There you go, 60-minute. Euro on top, dollar on the bottom. You can see big green candle, big red candle. It still holds true, right? So if the why is the dollar index got a big red candle? Because the euro has a big green candle. But if the dollar index has a big red candle, that's going to help the pound for a short time until this stops. There's the opening bell. All right, so enough of that example. Let's size this up. Sorry about that. Went and messed up my charts. I just got to make sure I don't save anything when this is over, and we'll be back to where we started. So pound dollar, I've lost all my notations. But even without a single indicator or a line, I can see exactly what Carlos is talking about. Look at this. 134. Resistance, resistance, resistance. One little bit above 134, but still, a point well made. So Carlos is absolutely correct. Could go to 134, and you can very well see it on the chart here. You've got higher highs, higher lows. I just think I might be getting in too soon. Right? Just feels a little bit early to me. Ed, what I like about the second oversold RSI signal is that the price action setup, which took place at the bottom of the critical prior area, the initial impulse buying, at times traders can use this as confluence, however, it does not always work. Yeah, I mean, that's a great point. Second oversold 1 hour RSI signal is at the price action setup, which took place at the bottom critical prior area, the initial impulse of buying. Another thing that's interesting too is, let's say you do get that second RSI buy signal. You're likely to get it at a lower price, right? And the targets are still legitimate. The targets that we set up initially should still work. At least target 2 and target 3 should still be valid. They're likely to still be valid. You never take anything for granted. I'm not going to tell you they're definitely still going to be valid. But the targets are likely to still be valid. So if we can set up to get a buy signal at a lower price point with the same targets, that's going to improve our risk reward. If I can get another buy signal closer to 128, where I'd have my backstop, where I know there's a lot of longer term support going on, my targets are still farther. Now my targets are farther away. My risk reward is better. My major support is closer. I like it better. And if and you know what? And if this trade works out and it ends up, oh, so what? You know, I can always take solace in the fact that I'm up 500 points on Aussie yen. Yeah. So, right? So they can't take that away from me. Okay. So Carlos says, amazing how much we have learned through the years in this room. You know, Carlos, it amazes me that if people knew how good this room was, everyone would be here. But I guess it's our little secret. Anyway, speaking of, we'll talk. No need to talk about Aussie yen too much, right? Just to point out, it's at 89, and we bought it at around 83.80. So we're up more than 500 pips. There's no need to go through the whole process again. By now, everybody knows how to raise the stops. It's been almost a month. And people say, "How long are you going to stay in this trade?" Well, it's been a month, and hopefully it'll be another month, and hopefully we'll be able to come back in August and say we've been in this for 2 months, and hopefully we'll be able to come back and say we're up 1,000 pips. But right now it's just 500, but um, you can never make 500 pips on a trade if you don't let them run. And there's a moral to the story, like you cannot have a big winner if you don't let winners run. And you can't make up for all those small losses if you don't have big winners, right? So this is how it's done, right? Trading's counterintuitive. We need to be mentally rehearsed, visualize everything we learn. It's hard work, but it's well worth it. That's right. Carlos is 100% right. That's what Carlos says. But at the same time, once you know how to do it, it's not hard work anymore, is it? It's like, what am I going to do all day? Right? It's like, what are you going to do with the rest of your day? It takes 15 minutes to move the stop, and then what are you going to do? So, but yeah, it's hard work. Getting to that point is hard work, sure. And getting to the point where you can force yourself to stay in a trade when every bone in your body is screaming at you to get out, get out, get out. I have to take the profit. And you can just calmly say, nah, maybe I'll take a little profit, but the rest of it, I'm just going to keep trailing the stop. When you can calmly do that, then that's when you're not trading against the market. It's yourself. You gotta be able to trade against yourself. And prevent yourself from beating you, if that makes any sense. There's always something to do in regard to trading. Yeah, there is. That's true. There is. But at the same time, um, sometimes it's better to feed the fish or practice your putting. Okay. All right, gang. As far as Draghi is concerned, just going to wrap up on this. By the way, he shot this thing higher, and sometimes it's better to feed the fish. It really is. Draghi's, yeah, it's pushed up to 115.70. Like I said, a few days ago, it topped up at 115.80, so this might be a tough nut to crack. Let's see if they try to run it through. I think he's done. I'm not in front of the TV right now, but I think he's done. But I think he's definitely confused a few people. I'm hawkish, I'm dovish, I'm hawkish, I'm dovish. The economy's improving, so we have to pour a lot of stimulus into it. Inflation is coming, so we have to do lots of QE. Uh, you know, I'm confused. he's got me confused. I have no idea what he means at this point. Okay. So, all right. Final note here, Bitcoin jumping over 2,500. Man, I'm starting to wonder why did I guess I didn't buy Bitcoin at 250 bucks because I thought it might go to zero. Now it's at 2,500 and I'm thinking, why didn't I buy it? It's like, oh yeah, because I was afraid it would go to zero. But here's Goldman Sachs now. Am I dreaming? Goldman Sachs is putting out a bullish note on Bitcoin. It could still go to zero. Who knows? And I'd feel a lot better about it if I could pull up a chart on TradeStation for Bitcoin. That's definitely it could go to zero, but there was the guy McAfee, right, who said it was going to go to a million. So, well, it could go to zero if it's hacked, right? It could be hacked, and isn't that what happened? Um, isn't that what happened earlier? The guy who ran the MTGOX exchange is accused of hacking it, but I don't know if they'll ever be able to prove it because how do you can't trace the thing, so how do you prove it? All right. So anyway, oh well. Anyway, look, everybody have a wonderful day. I won't be here with you next week. I'll be um I'll be away for the week, but the following week I'll be back. So I think I'll catch you a week from Monday. I'll be back. I'll see you then. So everyone, take care, and I'll look forward to seeing you a week from Monday. Have a great day. Have a great weekend. Have a great week.